The big news this week is that the 2-year rate dropped to 4.99. So we had Westpac with a 4.99 3-year rate. They pulled that last week, and literally an hour or two later, the ANZ came out with 4.99, matched by ASB and pretty much all the other banks, bar Kiwi Bank so far. So you can get a 2-year rate at 4.99. The 1-year rate's a little bit higher at about 5.15. The 18-month 5.12 is what we're seeing in the market, and the 3-year rate is up around 5.29. So, a very tight band, 4.99 to 5.29 for anywhere from sort of 1 year to 3 years. So what we're seeing is customers really favouring that 2-year rate at 4.99. We think that's a good rate, for the long term, on the basis that if you look at the last 20 years of mortgages, since the GFC, you've seen mortgages in a 4 to 5% band. So yes, it's the top of the band, but generally we think over the next year or two we'll see that rate in a 4.50 to 5% range. And the benefit of taking it now rather than waiting is that you immediately get to 4.99. An alternative strategy could be to go floating or take a 6-month term, but of course you're paying a higher rate for that in the short term. So that's the shape of the market at the moment. The other thing to note is that cash contributions are running at about 0.85 to 0.9. Now, banks' margins are a bit squeezed at the moment with those lower rates relative to the wholesale interest rates, so we do think those cash contributions could drop down a little bit. So one thing to consider, they could be a bit lower. So locking in now, potentially for 2 years, and spreading your terms is another option too.